Hey, Steve Saretsky here. As always, this is Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. For all those of you who have asked over the last couple of weeks, I've been bombarded with emails on the Calgary project. I'll have more information on that when I have it available. I'm not keeping it a secret. It's simply just working out the numbers, with the developer behind the scenes. I don't know if it's necessarily going to be as great as it maybe what I initially had hoped for. There's a lot of moving pieces behind it, so please, no need to email me at this point. If you've already emailed me, I will be in touch. Second of all, what I want to talk about in this video is really just on the market cycles and particularly the sort of mindset behind the real estate development community. I think that first and foremost, I have absolutely nothing against real estate developers. I actually do some consulting work in terms of doing appraisal reports for them, etc., basically advising them to some degree on their projects, where I feel the market is, etc. So I can certainly speak from that aspect. That kind of gives me a little bit of insight or intel in terms of how some of these guys think. But I'll never forget the Bloomberg interview. And you know what? I'm actually going to link to that Bloomberg interview in the description below. It was a podcast with Barry Ritholtz, who runs a very good finance podcast with Bloomberg. And he interviewed one of the largest property developers in the United States. And he asked him basically, did you and how did you, or what was your experience during the 2008 financial crisis? And this guy, again, one of the largest property developers in the United States, says, we had no idea. We didn't see it coming. We got caught. We sort of barely got by. But we, eventually recovered, came out of it, and, here we are today. And it kind of got my head, scratching a little bit, because this is, again, one of the largest developers with this experience. And you would think that, for someone of that caliber, of that expertise, of that, basically the top in their field, that they would have, surely they would have been warning signs or signals, or surely these guys, of all the developers out there, would have foresaw that there were significant problems ahead. But they didn't. And I think this really hammers home a point that, at least in my conversations and even my readings of the real estate industry in the space, is for the most part they don't really understand sort of macroeconomics, finance, credit, and really just overall. I think they understand cycles, but they don't really necessarily understand the pieces behind it. I think to have not seen 2008 coming is amazing. Any sophisticated investor saw all this warning signs in 2004, 2005, 2006 with the U.S. housing market and subprime. So, if you looked at any one of those large hedge funds, they all had massive positions, basically shorting the housing market or shorting subprime, and made fortunes and fortunes off of it. But yet some of the largest property builders, which are in the trenches day to day, didn't see it. And I think a lot of that just comes down to not necessarily understanding sort of credit in the larger picture. I think they're very good at building things and obviously bringing deals together and working with people, but doesn't necessarily mean that they're great finance minds. I think one of the great finance people that is also one of the largest developers is Sam Zell, and Sam Zell is called quote-unquote the gravedigger because Sam is one of those guys that every time the real estate industry is always bullish and thinks that things are going to continue to go on unabated, Sam is always the guy that's pulling back. And they called him the gravedigger because he was the guy that always scooped up all of the distressed properties because he was sitting on piles and piles of cash every time the cycle turned. And so I can't help but think portions of this, how they relate to Canadian real estate, particularly in Vancouver and Toronto. Looking at just Toronto, you can look at the latest Crane Index, basically the number of active cranes in the city of Toronto. It dwarfs, it nearly doubles. I think it more than doubles any other city in all of the US. And the fact of the matter is, the narrative in Toronto is that we're still not building enough. We need to cut the red tape. There was another member of parliament out there in Ontario. I saw him tweeting saying that we're going to advocate for cutting the red tape. Yet you have a record number of cranes in the sky. You have a record number of units under construction. The supply is certainly coming, and sales in Toronto, yes, they have sort of somewhat quote-unquote recovered, but they are still weak from a historical perspective. And given where we are in this economic expansion, I think that the supply is certainly coming too late. I mean, supply, the time you get this stuff approved and built, takes 4 or 5 years minimum for a lot of these high-rise projects. So all you have to do is look at Vancouver and see that given where we are today, the developers, all they can do is react to the demand. So what happens is in 2015 and 2016, you get this large run-up in home prices and this excessive demand for homes, and the developers react by then not only purchasing land, but then starting the permitting process and then actually building these things out. And so it's only now that we'll start to see towards the end of 2019 and the end of 2020, all of that reaction to the boom that was 2 or 3 years ago is now starting to actually come to the market, but it's coming at a market when you have a 20-year low in home sales to start the year as of the end of June. So, and this is just a reactionary factor, and it's one of the books that I encourage you to pick up is called The Skyscraper Curse, and it basically denotes that it's really on Austrian economics, on how generally the amount of building and cranes and actually the height of these towers that get built are actually a strong economic indicator towards predicting sort of future recessions and whatnot. So I think that it's just funny to sort of see how that shapes up. And just looking at Vancouver, we're now starting to see a similar narrative play out where not only are prices falling, but mortgage rates have also fallen. So that sort of eased the affordability. But people are saying, well, we're still not building enough. We're still not building enough. All this supply hasn't even come close to coming onto the market. And so if you understand real estate cycles, is what's going to happen is all of the supply is going to flood the market at arguably not great timing. And that's going to create continued buildup in inventory. We're already in a buyer's market, so that's going to add to the inventory, which is obviously going to put downwards pressure on prices. And then eventually, because the market will be so depressed, or the drop-off in home building is what then creates this shortage in homes and activity moving forward, and that actually starts your next upcycle. So we haven't yet allowed this inventory to actually come onto the market to provide further relief, but we're starting to see the developers pull back, and that will then create your next upcycle. But it's interesting just to even see again that we're seeing developers now switch and focus more towards the rental markets. You're seeing more and more rentals being built. I mean, here's a chart of rental units under construction across Greater Vancouver, currently at an all-time high. And meanwhile, you actually have more and more starts towards the residential rental space. So basically, all these developers are gearing towards rental now because it's perceived as less risky, right? If you can't sell a pre-sale condo unit because the demand is weak and because prices are continuing to fall, partially hedging some of your downside is actually switching, if you have the financing ability, is switching to purpose-built rental. And that's why we're still seeing housing starts for rentals are actually still at very, very elevated levels. And I suspect that they will continue to be at elevated levels, which should actually help the rental market. I think we're already seeing some easing in the rental market. I've talked about that ad nauseum. But I think this, again, just really to summarize this whole video, just comes down to understanding the cyclical nature of real estate and of the mindset and mentality of real estate developers. The fact of the matter is, because we have an egregious permit and development process in Canada, particularly in Vancouver, we're just getting projects approved and then going through the permitting process is such a lengthy process that all developers can do is actually respond to the activity, and then that building activity is essentially a lag on the market. So again, to say that we need to build more housing in the midst of a boom, well, the fact of the matter is the boom only lasts a couple years. So the time the supply comes, it's too late, and unfortunately, that's where we are today. So really, the only way to slow down these sort of speculative manias is ultimately just a dagger in the confidence, and that could be by restricting credit, but it could just be overall psychological impact on confidence. So anyways, that's all I got today. That's kind of my rant, just looking at sort of, again, what's happening in the construction space. I continue to be amazed by that. I think that's going to be the big thing here moving forward in 2020 and 2021. I just find it very fascinating to continue to see politicians continue to lament this supply side. And my argument is, at least for the next couple of years, I think we're going to have more than enough supply. It's just, of course, I think that if you want to continue to ease on the pressure on prices, you can certainly argue to build more. But I would argue that in cities like Toronto and Vancouver, because you have such record amount of construction under development, you're actually already at capacity from a business perspective. Is that because you're building so much, there's actually a shortage of trades, which not only inflates the cost of labor, but also inflates the cost of materials. And so that actually adds to the cost of development and to prices overall. So there's only so much that you can push, and I think the developers have certainly pushed them out of this building cycle, this real estate cycle. So again, we'll obviously, perhaps I am proven wrong in the next 1 to 2.5 years, but I think that there's been a huge building boom, and we'll sort of see how that shapes up. So anyways, hope that helped. Otherwise, see you next week.